To watch the full lecture of all subjects, kindly subscribe to my YouTube channel and press the bell icon because whenever I post the new videos, you will get the immediate notifications. Hello everyone, welcome to my YouTube channel. From this particular video, we'll be starting to solve the problems in the second method, that is accounting rate of return. We even call it as ARR. So in this chapter, it is the sixth problem which we are solving. So now before this, we need to remember one thing in our mind for calculating this ARR. So for calculating ARR, we require CFADAT. CFADAT. For PBP, whatever the sums we have solved till now, we were requiring CFBDAT. But for ARR, we require CFADAT. That is nothing but cash flow after depreciation and after tax. So after charging all depreciation and after charging all the tax, whatever the profit is left over, that cash flow we consider. Okay, now let us check the problem. So they have given ABC company has under consideration the following two project details. Please take the screenshot of the question because whenever I am solving, even if you people solve, you will easily understand the solution. So investment in machinery, this is also known as original investment, 10 lakh and 15 lakh working capital. So in this PBP working capital will not come, but in ARR working capital will be considered. Project X is 5 lakh and project Y is 5 lakh, means additional capital invested. Life of the machinery is 4 years and 6 years. Scrap value, we will even consider the scrap value also in ARR. It is 10% and 10%. Tax rate is 50,000 and 50,000. Income before depreciation after tax, this is CFBDBT. But for calculating ARR, as I told you, what we need, CFADAT. So CFBDBT, before depreciation, before charging tax, the profit was as follows. First year it was 8 lakh and 15 lakh. Second year 8 lakh and 9 lakh. Third year 8 lakh and 15 lakh. Fourth year 8 lakh and 8 lakh. So you may ask me why fifth and sixth year are nil, because the life of the asset is only 4 years. They have taken only 4 years. Here life of the asset is 6 years. So 6 years cash flow they have shown. We are required to calculate the ARR and suggestion we have to give which project is preferred. So let us solve the problem. Now first what we will do is we need to follow certain steps in this. So problem number 6. First step 1. It is calculation of CFADAT, because to calculate ARR we require CFADAT. So now take 5 columns like this. First column will be particulars. Second column year 1, year 2, year 3 and year 4. So in the problem what they have given for us, they have given CFBDBT. Question ನಮಗೆ CFBDBT ಕೊಟ್ಟಿದ್ದಾರೆ. So they have given total 2, project X and project Y. So first we will calculate completely for project X. So they have given for project X. So this is for project X and this is for project Y. So first year is 8 lakh. Second year is also 8 lakh. Third year is also 8 lakh. Fourth year is also 8 lakh. Now BDAT. So after depreciation, after charge. So before tax, before deducting tax, first we have to always deduct depreciation. So first let us deduct depreciation. Less depreciation. So first let us calculate depreciation. What is the formula to calculate depreciation? It is cost minus scrap value divided by life of the asset. So here they are given cost is how much? 10 lakh rupees. Cost of the asset is 10 lakh rupees minus scrap value. Scrap value they have told 10%. So in left side I'm finding out the scrap value. Let us find out the scrap value. So scrap value they have told 10%. Okay. The total machine is 1 lakh into 10 lakh into 10% will be 1 lakh. So scrap value will be 1 lakh. So 10 lakh minus 1 lakh divided by life of the machine project X is 4 years. 4 years. So 10 lakh minus 1 lakh will be 9 lakh divided by 4. So 9 lakh divided by 4 years will be 2,25,000. This is the depreciation amount. 2,25,000 is the depreciation amount. Now let us deduct that. 2,25,000, 2,25,000 and 2,25,000 and 2,25,000. Clear with this? Now when we deduct depreciation, we will get CFAD after depreciation before tax, because we have deducted depreciation. So now deduct 8 lakh minus 2,25,000 will be 5,75,000. Next 8 lakh minus 2,25,000, same 5,75,000. 8 lakh minus 2,25,000 would be 5,75,000. 8 lakh minus 2 what is that, 2,25,000 will be 5,75,000. Now from this we need to deduct tax. Tax they have told us how much, 50%. So 5,75,000 into 50% will be 2,87,500. 2,87,500, 2,87,500, 2,87,500. Now when you deduct tax, we will get CFAD 80. So subtract these two. It will be 2,87,500, 2,87,500, 2,87,500 and 2,87,500. Okay, this is CFAD 80. Now let us try to find out ARR. Formula to find out the ARR is equal to annual CFAD 80, annual CFAD 80 divided by average investment, divided by average investment into 100. Now first let us find out annual CFAD 80. Formula to find out annual CFAD 80 will be total of CFAD 80 divided by life of the asset. Total of CFAD 80. Now CFAD 80 total 2,87,500 plus 2,87,500 plus 2,87,500 plus 2,87,500. It will be how much? The total annual total of CFAD 80, it will be 11,50,000. 11,50,000. Now life of the asset, we know they have given in the question itself. What is the life of the asset? Life of the asset they have told life of machinery is 4 years. So 11,50,000 divided by 4, it will be 2,87,500. This is annual CFAD 80. How much? 2,87,500. Next we need to calculate average investment. To calculate average investment, there is a formula. What is the average investment formula? It is original investment. So what is the formula to find out the average investment is equal to original investment minus scrap value divided by 2 plus working capital plus scrap value. So formula original investment minus scrap value divided by 2 plus working capital plus scrap value. So original investment is how much? 10 lakh. 10 lakh minus scrap value is 10%. So we have already calculated the scrap value here. 10 lakh into 10% is 1 lakh. Scrap value is 1 lakh. So we have calculated scrap value is 1 lakh divided by 2 plus working capital. Working capital they have given in the question how much it is? 5 lakh. 5 lakh plus scrap value. Scrap value we have found out here. It is 1 lakh. Now 10 lakh minus 1 lakh will be 9 lakh divided by 2 plus 5 lakh plus 1 lakh will be 6 lakh. 9 lakh divided by 2 will be 4 lakh 50,000 plus 6 lakh. So it will be 10 lakh 50,000. 10 lakh 50,000 is the answer. Now this is average investment. What is the formula to find ARR? I told you that it is annual CFAD. Formulas and all you have to remember. There is no other option. Divided by average investment into 100. Now we have found out the annual CFAD. So where is it? Here. Annual CFAD is 2,87,500. So 2,87,500 divided by average investment. Here we have found out average investment is 10,50,000. 10,50,000 into 100. So 2,87,500 divided by 10,50,000 into 100. If you do, the answer will be, so 2,87,500 divided by 10,50,000 into 100. The answer for this particular problem will be 27.38%. ARR, accounting rate of return, will be 27.38%. This is for project X. Similar way we have to calculate now for project Y. Now let us check for project Y. First step is calculation of CFADAT. So take number of columns, particulars, first year, second year, third year, fourth year, fifth year and sixth year. So in question they have given us CFBD BT. Question ಅಲ್ಲಿ ನಮಗೆ CFBD BT ಕೊಟ್ಟಿದ್ದಾರೆ. ಇಲ್ಲಿ ನೋಡಿ ಅವರೇ ಹೇಳಿದ್ದಾರೆ income before depreciation and tax, which means CFBD BT, but for ARR we require CFADAT. So this is the cash inflows. First year 15 lakh. Second year it is 9 lakh. Third year it is 15 lakh. Fourth year it is 8 lakh. Fifth year it is 6 lakh. Sixth year it is 3 lakhs. Now first we need to always deduct depreciation. Let us calculate depreciation. Calculation of depreciation. So depreciation, here they have not given us percentage, so the formula will be depreciation is equal to cost minus scrap value divided by life of the asset. First let us find out the scrap value. So the formula to find the scrap value, they have told that scrap value is 10% on the value of machinery. So value of machinery is 15 lakh. On this 15 lakh, we need to charge 10% of scrap value. That will be 1 lakh 50,000. So the scrap value will be 1 lakh 50,000. Now let us apply this particular formula. Cost. Cost of the machinery is how much? It is 15 lakh. Minus scrap value. Scrap value is 1,50,000 divided by life. Life of the machinery is 6 years. So 15 lakh minus 1,50,000 will be 13 lakh 50,000 divided by 6, which is equal to 2 lakh 25,000. 2 lakh 25,000. This is project Y, depreciation. So this depreciation let us deduct here. 2,25,000, 2,25,000, 2,25,000, 2,25,000, 2,25,000 and 2,25,000. Now when we subtract, we get CFADBT. So 15 lakhs minus 2,25,000, it will be 12,75,000. 9 lakh minus 2,25,000, it will be 6,75,000. 15 lakh minus 2,25,000 will be 12,75,000. 8 lakh minus 2,25,000 will be 5,75,000. 6 lakh minus 2,25,000 will be 3,75,000. 3 lakh minus 2,25,000 will be 75,000. Now from this we need to deduct tax. In question they have told us tax is 50%. So 12,75,000 into 50% will be 6,37,500. 6,75,000 into 50% will be 3,37,500. 12,75,000 into 50% will be 6,37,500. Next, 5,75,000 into 50% will be 2,87,500. 3,75,000 into 50% will be 1,87,500. Next, 75,000 into 50% will be 37,500. Now subtract this. When we subtract, we get CFADAT. Subtract and write. Yes. So now we got CFADAT. Now we can find out ARR. The formula to find ARR is annual. The formula is average annual CFADAT divided by average investment. Now first let us find into 100. First let us find out average annual CFADAT. Now add everything. So the formula is total CFADAT divided by life or number of years. So now total we have to do. Do this total. 6,37,500 plus 3,37,500 plus 6,37,500 plus 2,87,500 plus 1,87,500 plus 37,500. When you add everything, we get the, what you say, total CF AD AT. It comes to 21 lakh 25,000. Now divided by life. So the life of the machinery is 6 years. So divided by 6, it will be 35,400, sorry, 3,54,167. This is average annual CFAD80. Now we need to find out average investment. Average investment. The average investment will be original investment minus scrap value divided by 2. Original investment minus scrap value divided by 2 plus working capital plus scrap value. Now original investment they have given in the question. Original investment is 15 lakh minus scrap value. Here we have found out the scrap value. Scrap value is 1,50,000. 1,50,000 divided by 2 plus working capital they have given in the question, that is 5 lakh rupees plus scrap value 1,50,000. Now 15 lakh minus 1,50,000. 15 lakh minus 1,50,000 will be 13 lakh 50,000 divided by 2 plus 5 lakh plus 1,50,000 will be 6,50,000. 13,50,000 divided by 2 will be 6,75,000 plus 6,50,000. It will be 3,25,000. This is average investment. Now we can find easily ARR. ARR is equal to average annual CFAD80 divided by average investment into 100. So here we have found out average annual CFAD80 is 3,54,167. So this is 13 lakh, sorry, 6,75,000 plus 6,50,000 is 13 lakh. So average annual CFAD was 3,54,167 divided by average investment, it is 13,25,000 into 100. So 3,54,165 divided by 13,25,000 will be 0.267 into 100 will be 26.73%. Now listen here, we have project X and project Y. So when we check with the project X ARR, annual return rate of return for project X, it was 27.38%. For project Y, here we have found out 26.73%. Now whichever is higher, so will be advisable. So we need to advise the company project X is advisable as it yields higher average rate of return. In bracket you can write 73.3, sorry, 27.38 percentage. This is how you need to solve the problem. Hope you have understood how to solve this type of problem. If you have any doubt while solving the problem, please put all your doubts and queries in the comment box so that I'll be able to respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next video. If you have any queries regarding today's session, kindly send your queries to education.mbroadcast@gmail.com.